Right now, we're seeing futures, fractionally up higher right now ahead of the Fed decision today. So what are you watching for? What kind of impact do you think it's going to have on the markets?
Yeah, big day today. I think, to kind of just lay it out there, I do think that whatever impact it does have on the markets is sort of short-lived. It doesn't really change my view going into the end of the year unless it's a shock. So I do think that the wide expectation is that the Fed will hold today and talk about perhaps one more rate hike this year. But what's very important and what will be very interesting is to see what that median dot plot looks like. So how many more rates are actually being, thought of being priced in for the rest of the year. If it's more than one, I think the market pulls back immediately and we go back into worrying about whether or not, there will be a recession, whether or not we sort of lose that soft landing that I think we're already in now. And then the other topic is actually going to be that 100 basis points rate cut that we are thinking about for next year or within the next 18 months or so. So if that's something that is then off the table, I think the market gets spooked that perhaps the opportunities that we're hoping for will be sort of hindered by higher rates.
All right, so you're paying close attention to the Fed projections, but you're a bit of a contrarian. I think a lot of people think that the Fed's done, but you're actually looking at one, maybe even two more hikes. Is that priced in? Because right now we are seeing futures move higher. I would think that would be on the thought that the Fed might be done or might not be as hawkish as they previously were.
Yeah, well, I think that there's probably one hike priced in. I think anything beyond that is actually something that will pull the market back and sort of change the course of pricing going into the end of the year. If we get one more hike, I think that the market's on track. We rally into the end of the year. There's a lot of reason that we should have some tailwinds and momentum to see a positive S&P, NASDAQ, maybe 3 to 5% from where we are now. But if we get more than one hike, I think that'll be a little bit trickier for the market, and then I think it'll be choppy, volatile. It'll probably end a little flatter.
All right, so if one more hike's already priced in, so if we hear a hawkish Jay Powell, do you think that'll lead to a sell-off at the back end of the day? We've seen sell-offs at the back end of the day when Powell's been hawkish.
Yes, and these are nail-biter days for me. I almost sort of hate watching what happens. He gets on TV, he sort of does what we expect, and then it's all about the speech, right? And then you just see the market pulling back and pulling back and pulling back. But the good news about that is that, if we put things in perspective, the economy is strong, that 2.4% GDP, 2% before that, strong consumer continues to spend, good jobs, things like this. If the market pulls back and you take all of that together, it could be a good buying opportunity as well. So you have to sort of keep your wits about you with these things.
All right. We also want to talk about one of your products. It's one of the products you're telling us to highlight today. The ticker JEPY. It's a zero-day trading option product. You said volume really picked up yesterday ahead of this Fed decision. What does that tell you about investors?
Yeah, so what this does is actually harvests income. It essentially looks to sell slightly in the money puts that are expiring within one day or essentially 0 days to expiry. The trade goes on at the close and it goes off before the next day expires, and the puts settle to cash. So essentially it can generate income between 0 to 1% a day. It could be 60% of income per year. So I think, the reason that investors are piling into something like that is because they like income. They could be, kind of uncertain about which stocks to pick, which stocks will be impacted by high rate hikes. And you get a lot of these income products out there, and it certainly piques investors' interest. And the volume in that, and then, QQQI, which is another one that does the same thing, has just been stellar for the last day or two.
Yeah, we're looking at right now. It's up almost 1.5% in the pre-market. We don't really track these very often. So would you recommend that people put money in that today ahead of this Fed decision? Is that a wise move in your opinion?
Yeah, so the reason you probably don't track it is because it is brand new. The concept of 0 day to expiry options is actually brand new in itself. So it's something very exciting for investors to think about, a new way to think about how to generate enhanced income if you're comfortable with equity risk. So particularly if we get a market pullback, it would be a great time to get in because you will sort of get some downside exposure on the equity. You might get a better price point to get in. And then, what we do, because we're generating that income on a daily basis, you sort of soften the blow on the pull down and you benefit in the long run as income goes up.